This whole thing is a huge nothing burger. This is the third deal that China has done. The other two countries are Pakistan and Brazil. And the reason why is I see like people on Twitter now breathlessly rambling on about de-dollarization and all of this stuff. And I think if any of these people would think from first principles, the first thing that you would know is that the yuan is pegged to the US dollar. And so as long as it's pegged, whether you trade through the US dollar or you don't and you directly go to yuan, you're indexed to the US dollar. And then you use a dollar swap to convert it into the currency you need. So I don't know. I think this is kind of like a lot of folks who don't really know what's going on.
Recently, there have been many discussions, articles, opinion pieces, and interviews about China's de-dollarization agenda and its potential impact on the United States economy. These discussions have emerged from the Asian countries' renewed efforts to displace the United States and the US dollar as the world's leading economy and currency, respectively. In a recent episode of the All In podcast, David Sachs, David Friedberg, and Jason Calacanis discussed China's de-dollarization agenda and whether it poses any economic risks to the United States. According to venture capitalist Chamath Palihapitiya, the United States is not in any danger of de-dollarization in the near future. He argues that the yuan is still pegged to the dollar, unlike most advanced economies, and its value is artificially kept down to strengthen the country's export trade. This, along with China's relentless purchase of the dollar, would help it keep its place as the world's reserve currency for much longer than many experts are predicting. However, Sachs and Friedberg argue that the United States is substantially burdened by deficits, debts, and unfunded liabilities. They also believe that the Federal Reserve will soon be forced to return to the printers in a bid to delay the inevitable. The Besties podcast presents insightful clips discussing the present precarious situation of the world's largest economy.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The reason why China has had so much dominance as a trading partner, and the reason why China's central bank has the largest amount of foreign US dollar reserves, about $3.5 trillion, is exactly because of the thing that you want to ignore in order to have this highfalutin intellectual conversation. It is pegged to the US dollar. And until it is unpegged in a free-floating currency, we will never know what the real market clearing price is.
And so
China has been able to, China has been very effectively able to manipulate this currency since they were brought into the WTO in order to engender that trading partner status. They were able to artificially suppress the value of their currency so that exports from China could gain traction in countries all around the world. You have to take into account this currency peg, and you have to ask the question, where would the currency be if it wasn't free floating? And then what would the incentives be for folks to replace the dollar? And I think that there's a lot of interesting questions there that are worth asking, but I think you have to be a little bit more intellectually honest to have the discussion.
And just for clarity, Chamath, you said they already have these deals with Pakistan and Brazil.
And Russia.
You meant Pakistan and Russia, I think.
I think de-dollarization hasn't happened yet, but I think it's a risk. And I think there's a bunch of reasons why the risk is growing. So, first of all, we have $32 trillion in debt. Someone has to finance that debt. And the bigger that number gets, the more unattractive our debt is, because they have to be concerned that we're eventually going to monetize the debt, pay it back by printing a bunch of new dollars. So that's point number one, is we have these massive deficits and debts. Number two is that we have, I think, in the last couple of years, really weaponized the dollar. So if you look at like what we've done with Ukraine and Russia, we basically seized hundreds of billions of dollars of Russian reserves that were held in dollars. We've excluded them from the SWIFT banking system. We've imposed massive sanctions on them. And in fact, we now have sanctions on a huge number of countries all over the world. So we're very sanction happy, all of which makes these countries view the dollar as an unreliable store of value. Why would you store your money in something that can be taken away by the US and specifically by the State Department? So I think this is a major change in the way that we view the dollar over the last couple of years, is we're going to use it as a weapon. That, again, that makes it viewed.
Well, that's not the first time we've ever done that, right? We've done sanctions against many different
We've done sanctions, but as far as I know, we've never seized foreign currency reserves and excluded a country from SWIFT, which is the banking system. So as an instrument of U.S. foreign policy. So, I mean, I could be wrong about that, but this was a major event when it happened. Remember, we also did stuff like seize the yachts and the foreign holdings of Russian oligarchs. Remember their ill-gotten gains? We suddenly decided they were ill-gotten. Let me tell you, we didn't think they were ill-gotten when those Russian billionaires were buying those yachts or buying New York real estate or London real estate.
Or investing in Facebook.
Or investing in companies here or buying sports teams or what have you. So we didn't think they were ill-gotten. Hold on. We didn't think they were ill-gotten at the time that they were actually made and spent, but we decided subsequently we're just going to seize those things. Well, again, if you are a foreign country or a wealthy person in a foreign country and you're just trying to decide where you're going to keep your money, you may not want it to be liable to the vagaries of U.S. foreign policy. So I think all these things do matter. And when you're running the kind of debt and deficits we have, and you're making the U.S. dollar less attractive, you are running a risk.
A Russian official recently announced that the BRICS nations are developing a new currency that would be pegged to gold, rare earth elements, or soil. The official, Alexander Babikov, stated that the goal was not to defend the dollar or euro, but to create a single currency that would challenge the dollar's dominance. He explained that the first step towards weakening the dollar's dominance was transitioning to settlements in national currencies. The next step, he said, was to introduce a fundamentally new currency, whether digital or in another form. Babikov suggested that the readiness to relay this project would be announced at the upcoming BRICS Leaders Summit in August, adding that such works are already underway. Sachs and Friedberg argue that this move presents viable options for countries and investors seeking to escape the sanction-prone U.S. economy. However, Chomsky countered that most major economies are in a similar amount of trouble as the United States. Sachs and Friedberg were able to successfully argue that the U.S. might be in much more trouble in years to come. Clips from the podcast are available for further listening.
We have this $32 trillion debt that we're now having to refinance at much higher interest rates. I read somewhere that half our government debt, so $16 billion, is going to come due, trillion, yeah. And it's going to have to be refinanced in the next 3 years. The average rate on that debt is 1.7%. Well, if you want to refinance it at 10-year rates, you're going to be looking at somewhere between 3.5% and 4%, maybe more. So you're looking at a doubling of the interest costs. And I also read that by 2030, we're going to have over $1 trillion of interest expense owed by the U.S. government every year. That is money that's not funding anyone's Social Security. It's not funding anyone's healthcare. It's not funding one weapons program. It's not funding anything we want. It's the VIG. It's going to be more than a quarter of our total federal budget.
Look, we're in trouble. And it's unclear the timing and the path, but the arithmetic is pretty simple. In addition to the point Sachs made, you guys saw the news, the city of Chicago has a $44 billion pension hole. That's just the tip of the iceberg on unfunded pension liabilities from both state government, city government, even private institutions. This is, again, hundreds of millions of people worldwide that are expecting money coming to them from institutions that ultimately the federal government of the US is likely going to have to backstop to some degree. So that's another huge check that's going to need to be written, that the federal government is inevitably going to have to write, because we're not going to just let all these people have no money and become starving. And Social Security right now is projected to go bankrupt sometime between 2030 and 2035. So we're going to have to write a check to cover the hole there. The holes need to be filled. So the money is not going to just not get paid to the pensioners. Social Security is not going to go away. Just like we saw in France, if you start to do that, you have revolutions in the street. There's literally bonfires at intersections in France, in Paris today, because people don't want to wait another 2 years before they get their pension payments. So ultimately, that check has to be written. When you add up the column of how much money is not on the balance sheet today, how much liability is not on the balance sheet today, that is ultimately going to have to get paid out, and the US government is going to print money to pay it out, it indicates that there is a higher degree of uncertainty on whether or not I'm actually going to get the value back for the bonds that I'm buying in US dollar denominated form, or that the US dollar is actually going to be strong enough to cover the cost, or has enough kind of, or has too much volatility because of this uncertainty. And I think that that's really where people start to say, well, maybe the US dollar isn't that risk-free rate where it's a strong economy with a great balance sheet, great economic growth. There's certainly extraordinary potential because of the freedoms that we have to operate in this country as individuals through the enterprise, through the innovation, through the entrepreneurship, through the attraction of talent from all over the world to come here. But at the end of the day, we do seem to have a very big set of checks that we're going to have to write. And as those, liabilities start to mount, there becomes a real question on, do I really want to hold dollars? Maybe I want to hold something else. And maybe I diversify a little bit. And maybe instead of holding just dollars, I also hold other things. And as that starts to happen, you see a little bit of a shift. And it's not an overnight thing. It's all catastrophic, one or the other. But it starts to bring into question whether the US dollar is the standard de facto system that's used for trade around the world.
Sachs suggests that despite being the most desirable option in the struggling global economy, the United States is experiencing a rapid unraveling that surpasses what the government is willing to admit. Along with increased taxes, there is an inevitable need to print more money, which creates additional issues along with temporary solutions. What do you think about the conversation between the besties and the ongoing de-dollarization efforts of the BRICS nations? Feel free to share your thoughts and observations in the comments section below. For more Daily Dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.